Do you remember that catchy song, SoFi Needs a Ladder? Well, it turns out that SoFi just got a major boost up the ladder. And it wasn't from a footstool, but rather from the Supreme Court. Do you know what that means for your investment portfolio? Take a wild guess and share your thoughts in the comments section. Hello everyone, welcome back to Investing Lighthouse, where we bring the fascinating world of stocks, finance, and investment to your screens. If you're new here, join our community of savvy investors by clicking that subscribe button. So, why are we excited about SoFi? There are several reasons, but let's start from the top and discuss what could be a short-term positive catalyst for the stock. On June 30th, 2023, the Supreme Court struck down President Biden's student loan forgiveness plan. Now, if you're scratching your head, wondering how that's good news for SoFi, let me explain. According to research conducted by Oppenheimer, the student loan refinancing market is characterized by a high concentration level. SoFi, Navient, and KeyCorp, the three major companies in this industry, collectively control approximately 90% of the market share. And SoFi stands out as the leading player, holding an estimated 60% of the market. So it's no wonder why SoFi has been desperately wanting this pause to end, and why it had to shift its focus to originating personal loans in recent years. The student loan payment freeze lowered borrowers' refinancing incentive, leading to a nearly 61% drop in student loan origination volume for SoFi between Q1 2019 and Q1 2023. SoFi estimates that the pandemic-era moratorium on federal student loan payments has cost them around $150 million in profits. Can you imagine that? It now expects increased demand for student loan refinancing from borrowers looking to lower their monthly payments. SoFi is banking on the fact that many borrowers will find value, either by extending their term to reduce the monthly expense or by lowering their interest rate and maintaining the term to save money overall. SoFi may not expect to return to its Q4 2019 levels immediately after the moratorium ends, but industry analysts are hopeful. Piper Sandler's analysts project that industry-wide demand for refinancing could increase 2- or 3-fold in the latter half of the year. This turn of events sent waves of anticipation through the market. With the prospects of pent-up refinancing demand, investor excitement grew. Riding this wave, SoFi's stock price is already up a whopping 101% this year. Let's step back for a moment. SoFi is far more than a leader in the student loan refinancing business. This fintech company aims to disrupt traditional banking and offer a wide array of financial services under one roof. They're essentially your one-stop shop for digital financial services with a clear mission, helping you achieve financial independence to realize your dreams. Now, doesn't that sound like a friend you'd want on your financial journey? Plus, did you know, SoFi is more than just an innovative company. They're also a full-fledged bank. With almost 5.7 million SoFi members, the company is on a roll, offering everything you need to manage your finances better. From borrowing, saving, spending, and investing to protecting your money. SoFi provides fast access to these tools, all conveniently available in one app. But SoFi doesn't just stop at providing financial tools. They go further, equipping members with valuable resources to propel their financial growth. Imagine having career advisors, certified financial planners, exclusive experiences and events, and a thriving community all at your disposal on your path to financial independence. Sounds impressive, right? SoFi's innovations are spread across 3 business segments: lending, financial services, and technology platform. The lending segment consists of home, personal, and student loan products, as well as their related servicing activities. The technology platform, on the other hand, is a game changer. It's the only end-to-end, vertically integrated financial technology stack out there, giving SoFi an edge over its competitors. And finally, The financial services segment includes products such as SoFi Money, SoFi Invest, SoFi Credit Card, SoFi Relay, and other financial services. The SoFi Money product includes digital banking experience for checking and savings accounts, and also cash management accounts. And who's the man steering this ship? It's Anthony Noto, the CEO of SoFi. This man has an impressive resume. He was the Chief Financial Officer and later on, Chief Operating Officer at Twitter. Before his roles at Twitter, he worked at Goldman Sachs, where he became the co-head of Global TMT Investment Banking and was the NFL CFO for almost 3 years. Noto's leadership is so remarkable because he can overcome challenges and steer SoFi to success. Despite the obstacles posed by a 3-year moratorium on student loan repayments and a decrease in mortgage loan originations in the US due to higher interest rates, Noto and his team achieved record revenues for 8 consecutive quarters. That's no small feat, and that's just another reason why we're so excited about this stock. SoFi is scheduled to release its Q2 2023 earnings results on July 31st, 2023. And we'll soon find out whether they'll surprise the analyst community once again. Remember that in Q1, SoFi earnings per share came in at minus 5 cents, while the consensus EPS was at minus 7 cents, representing a 28.6% surprise. The consensus revenue estimate for Q2 is $476 million, which would represent a 33% sales growth rate compared to 1 year ago. As for earnings per share, the consensus estimate sits at minus 6 cents and would represent a tremendous improvement from the minus 12 cents EPS they posted during the same period last year. To illustrate how SoFi is currently firing on all cylinders, let's take a moment to review their Q1 2023 performance, as this quarter marked the 3rd consecutive quarter of record adjusted EBITDA at $76 million. This translates to a 48% increase in the EBITDA margin from a year ago, and an overall 16% margin. As for net revenues, they reached $476 million, up 43% from a year ago, while the company's net income margin grew by 54%. These record results were driven by excellent performance across all of SoFi's 3 business segments. SoFi gained over 433,000 new members during the first quarter, increasing the total membership by 46% year over year to nearly 5.7 million. The company also introduced 660,000 new products, expanding the total offering to nearly 8.6 million, marking a 46% annual increase. Another really impressive metric we like about SoFi is that it saw its total customer deposits grow by a record $2.7 billion, up 37% from the previous quarter, reaching $10 billion. At a time when regional banks have seen customers withdrawing money due to concerns about their financial stability, SoFi has managed to instill confidence and attract deposits. The company's lending segment's net revenue was $337.1 million, 33% more than the same period last year. Profits from this segment also increased by 58% to $209.9 million, from $132.7 million. And despite a challenging lending environment, the volume of loans SoFi made also rose by 7% year over year, driven by strong demand for personal loans. Net revenue from SoFi's technology platform segment grew by 28% year over year in Q1, increasing to $77.9 million. The profits from this segment were $14.9 million, and the total number of client accounts using this platform increased by 15% to 126.3 million. Lastly, the financial services segment saw a massive 244% increase in net revenue to $81.1 million from $23.5 million during the same period in the previous year. The loss in this area was $24.2 million, a significant improvement from a loss of $49.5 million in the same quarter last year. Let's also remember this other exciting development. By Q4 2023, SoFi expects to reach quarterly net income profitability. Could this be one of the reasons why Cathie Wood's ARK Invest recently initiated a position in SoFi, purchasing nearly 284,000 shares? We believe this is a strong endorsement, indicating a positive future for SoFi, and that all these factors make SoFi a compelling long-term investment. Now, for full transparency, we need to mention that we are long SoFi stock. We believe in its long-term potential. But remember that investing always carries risk, and your financial circumstances and investor profile are unique. We're here to provide information, but you must decide what fits your investment strategy. If you enjoyed this video, remember to like, share, and subscribe to our channel for more insightful updates from the world of stocks and investment. In the comments, let us know what you think about SoFi. Is it on your investment radar? We'd love to hear your thoughts. Until next time, keep learning, keep growing, and most importantly, keep having fun on this journey. Stay savvy, investors!